everybody, Dave Bartosiak with trending stocks at Zacks.com. Now, if you thought that tech stocks in the U.S. have had it rough, you should take a look across the Pacific. Chinese tech companies have been hit even harder, as if the trade war wasn't enough. Now, Jingping, pretty sure I said that wrong, has consolidated his power in the Communist Party. The news last night shook Hong Kong's benchmark index, taking it under 16,000 for the first time since April of 2009, after the worst one-day sell-off since November 2008. The tech index in that stock exchange was off 9.7% on the day. That translated to some terrible reactions here stateside, with Alibaba and JD.com giving up close to 15%. Looking at the long-term charts here, I'm seeing internet stocks from China off 70% or worse from their highs. With this nasty, fearful, vindictive market drop in Hong Kong, could it be time for the contrarian in all of us to come out, close our nose, and buy the dip? Let's check out Zacks.com to see the earnings picture on some of these Chinese internet names. So the giant in the room that everybody knows, Alibaba.com. Now, it is currently a Zacks rank number 3 hold. Here we can see the intraday action with the stock down almost 15%. Pretty nasty right there. But it is in the internet commerce industry, which we have in the top 19% of our Zacks industry rank. So the industry overall, not too bad. They are coming off an earnings surprise. Now, we can look at some of these growth numbers and we can trick ourselves all we like. So if we look at the sales growth, nothing going on this year but 11% next year. But how does that translate over to EPS? Well, it flat out doesn't. 8% contraction, 8.5% growth next year. But when you really want to understand sort of the medium-term implications of anything you're looking at in the stock market, I think the best place to go ahead and look is the price consensus and EPS surprise chart on Zacks.com. Because we get so much information just from this one chart. So the black line corresponds to the price, which is on the right y-axis. The little arrows that are green are earnings beats. The red ones are earnings misses. Now, these multicolored lines represent the evolution of our Zacks consensus estimates for earnings over time. Now, what you see here is a huge run-up in the stock while you had those growth numbers. And then what happened? Well, these estimates started high and then came crashing down. So you can say that there was a lot of negativity just in the macro environment in here, and maybe it was sentiment that was pushing these stocks down, but guess what? You're wrong, because it's the actual earnings moving to the downside that has been hitting this stock. So you're seeing that multiple really come down while the earnings are coming down. That is a recipe for disaster, which is why you have a stock like Alibaba, which was over $300 towards the end of 2020. And now, 61. Okay, let's look at a couple other Chinese internet stocks here, see what we've got going on. So here's another one, Ding Dong Cayman. Funny name, I know, but it is Zacks rank number 1, a strong buy within that same industry. And again, these detailed estimates are one thing, and they do look a little bit better than you see at Alibaba, where you got 19% growth on the sales, almost 17% for next year. But has that translated to any real profits? The answer is no. So you got no profits this year, no profits next year. Maybe you can wait for this one to mature a little bit. And you take a look at their price consensus EPS surprise chart. What do you have? Another stock falling off of a cliff, going from 30 bucks to the single digits. This one all the way down at 269. But again, another example of a stock getting beat down almost 20% today on the Ding Dong Cayman. Now, JD.com, this is another more mature sort of Chinese internet stock. Zacks ranked number 1 strong buy. This has that rare combination of A's for value, growth, momentum, and that VGM composite. So in terms of Zacks rankiness, this is the best that you can get. And when you're looking at the numbers, not too bad. So this year's growth, stagnant. Next year is expected to swell to 15%. Current year EPS growth, on the other hand, 29%. With next year going to 19.6%. So these are all pretty decent numbers here. That's helping the stock out to a PE right here of 19.38. You got the rest of the industry at 12.9 and the S&P 500 at 16.78. So a little bit cheaper than the industry average, but I mean, a little bit more expensive rather than the industry average. But look at the growth numbers, though. You got those growth numbers compared to the industry shrinking next year or next quarter, current year. So in terms of the growth, it's here. Again, let's look at this chart. Price consensus EPS surprise. Is this a surprise? Guess what? Every single one of these Chinese internet stocks topped out end of 2020, beginning of 2021, right? Have since gone down. But look at the earnings picture here, though. This is what I like to call divergence, and this is divergence in a good way. So you have the price coming down, but earnings are going up. Eventually what happens is the rubber meets the road, and the price has a tendency to catch up with earnings, because earnings trends typically don't stop on a dime and reverse. They don't squiggle around a lot. You typically find a direction, sort of go that way with it, right? So you're seeing this turn up in 2022, a little bit in 2023. That should help this stock kind of stay in there. So far, this is the one I like the most. The last one is a Pinduoduo. Again, Zacks rank #1, strong buy. Same industry. Also getting beat up 25% so far today alone. Big EPS surprise last quarter. That's a good thing. This one trading 18 times earnings, so sort of in the same boat as JD, where there's actual growth. And if you look, serious growth on the EPS side. But let's dig into this and make sure this isn't coming off of a super low number, and it's not. Sales growth current year 25%, next year almost 25%, EPS 117% this year, 18% next year. So that's pretty good. I like to see that. And again, let's look at our big money chart here. Price consensus, EPS surprise, and oh my, what a surprise. Early 2021, that's when it peaks. This one seems to have bottom. Look at the momentum. A huge earnings beat, huge earnings beat, huge earnings beat. Keeps on going back for 6 consecutive quarters. What else has happened? Look at this 2022 EPS. It stays rising. And 2023 is basically at the levels it was at when the stock was almost $200 per share. So another bit of divergence here on the price consensus and EPS surprise chart. So if you're looking to hold your nose and buy the dip, got a couple ideas for you to investigate further. Pinduoduo, ticker PDD, and the JD.com, ticker JD. Every time you share this video, somebody pulls the trigger on a cheap Chinese internet company and hits it rich a couple years later. Subscribe to the YouTube channel, Twitter @Bartosiastics, and check out Zacks.com/promo for this week's deal on our home study course. For everybody here at Zacks.com, I'm Dave Bartosiak, and we'll see you next week.